The world of cryptocurrency trading calls out. It promises innovation and hints at fortune. But this arena is not for the faint of heart. The digital coliseum is vast, filled with opportunity and significant risk. Every click, every trade, carries weight. Fortunes can be made and lost in the blink of an eye. Understanding this duality is the first crucial step. I remember my own entry, a mix of excitement and trepidation. Bitcoin, Ethereum, decentralized systems, these were revolutionary ideas. The potential to be part of this financial evolution was compelling. The charts looked like mountain ranges, promising thrilling climbs and steep descents. I knew I couldn't just watch from the sidelines. I had to experience the pulse of the market. This decision was not taken lightly. It was a commitment to learn. We see stories of early adopters and hear tales of incredible gains. These narratives paint a picture of easy money, but the reality is far more complex. The crypto market operates 24/7, influenced by a myriad of factors. News from across the world can shift prices dramatically. A tweet can send ripples, or even waves. This constant motion is part of its draw and inherent danger. Can one truly outsmart this market? Perhaps a better question is, can one navigate it wisely? Understanding its patterns, moods, and mechanisms is a worthy goal. That is the path I chose to explore, a path of continuous learning. Welcome to the Digital Coliseum. For new traders, the crypto market presents a steep climb. It is like learning a new language spoken at high speed. The terminology alone can be daunting. Blockchain, altcoins, DeFi, NFTs, each term opens up a new world of complexity. The sheer volume of information can feel overwhelming. Many beginners feel lost, not knowing where to start. This initial confusion is a common experience. Then there is the market's infamous volatility. Prices can soar to dizzying heights and plummet with terrifying speed. This is not like traditional stock markets. The swings are often more extreme. A 10% change in a day is not unusual. This unpredictability makes planning difficult and holding on to your strategy even harder. For a novice, these wild movements can be deeply unsettling. They test your resolve and your stomach for risk. Beyond the technical aspects, there are emotional pitfalls. Greed whispers in your ear when prices rise, telling you to hold on for more. Fear screams when prices fall, urging you to sell at a loss. And then there is FOMO, the fear of missing out. These emotions are powerful and can cloud judgment. They lead to impulsive, often costly decisions. My early days were a whirlwind of mistakes and lessons. The market seemed designed to exploit every psychological weakness. The unpredictability was a constant source of stress. I quickly realized that surviving required more than just luck. It required a new mindset, discipline, and a robust framework for decision-making. The early challenges are a rite of passage for every trader. Trading without analysis is like sailing without a compass. You are adrift, at the mercy of the currents. In the crypto markets, this is even more true. Market analysis provides your tools for navigation. It helps you make sense of the chaos and make informed choices. There are two main schools of thought in analysis: technical and fundamental. Technical analysis involves studying price charts and historical data. We look for patterns and use indicators like moving averages, RSI, MACD. These tools help us gauge market sentiment and identify potential support and resistance levels. Technical analysis is about the what and when of price movements. The second school is fundamental analysis, which looks deeper. It examines the underlying value of a cryptocurrency. What problem does this project solve? Who is the team behind it? How strong is the community? Fundamental analysis tries to determine if a coin is undervalued or overvalued. It focuses on the long-term potential of a project. Neither approach is a magic bullet. The most effective traders often combine both. Technical analysis can help with timing entries and exits. Fundamental analysis can help choose which assets are worth trading. Together, they provide a more complete picture. They help you build a thesis for a trade. This analytical foundation transforms gambling into calculated risk-taking. It is the bedrock of a sustainable trading approach. Market analysis is your compass in the crypto seas. A strategy is your map in the turbulent crypto seas. Without one, you are simply reacting, driven by emotion and market noise. A clear trading strategy provides structure and defines your rules of engagement. It tells you when to act and when to wait. It must be tailored to your risk tolerance and personality. A core part of any strategy is defining entry and exit points. Before you place a trade, you should know this. Where will you get in? At what price level does the risk-reward ratio look favorable? More importantly, where will you get out? This means setting a stop-loss order. This is the price at which you accept you were wrong and cut your losses. You also need a take-profit target to secure your gains. Hope is not a strategy. Risk management is the most critical element of all. It is the art of survival. How much capital will you risk on a single trade? A common rule is 1 to 2% of your total trading capital. This ensures that a few losing trades won't wipe you out. Position sizing is key here, determined by your stop-loss distance. Diversification can also play a role, though in crypto, many assets are highly correlated. The hardest part is discipline. You can have the best strategy and analysis, but if you don't follow your own rules, it is all worthless. Discipline means executing your plan, even when it's uncomfortable. It means taking the stop-loss when it's hit and taking profits at your target. Discipline is the bridge between your strategy and consistent results. It is forged in the fire of live trading. It is what separates amateurs from professionals. Section 5, The Breakout Beckons, a moment of truth in the market. I recall one particular trade vividly. A smaller altcoin, let's call it Project X, had been consolidating for weeks. The price action was coiling like a spring. On the chart, a clear resistance level had formed. It had been tested multiple times. Each time the price retreated, but each retreat was shallower than the last. Volume was decreasing during this consolidation, often signaling a big move. My technical analysis pointed towards a potential upward breakout. The fundamentals of Project X were also decent. They had an upcoming product release. I identified the key resistance level and decided that if the price broke above this level with strong volume, I would enter. My entry point was set just above the resistance, my stop loss just below it. This gave me a defined risk. If the breakout failed, I would be out quickly. My initial take-profit target was set at a previous swing high, offering a good risk-to-reward ratio. I watched the chart patiently. Then, one afternoon, the volume started to pick up. Suddenly, a large green candle appeared, smashing through the resistance level. Volume spiked significantly. This was the signal I was waiting for. I executed my buy order. The price hit my target, and I sold a portion of my position, securing profit. I moved my stop loss up to my entry point for the remaining position, making the rest of the trade risk-free. The price continued to rally further, and I eventually closed the rest of the position at a higher target. The key lesson here was patience and the importance of having a plan. Section 6. When the tides turn, riding out unexpected market storms. Not all trades go as planned. The crypto market is a master of surprise. One day, a different scenario unfolded. I was in a trade that looked promising. The analysis was sound, the entry was clean, and the price was moving in my favor. Then, out of nowhere, negative news hit the project. The market reacted instantly and violently. The price of the asset began to plummet. My unrealized profits evaporated in minutes. The emotional impact was immediate. A knot formed in my stomach. The urge to panic was strong. My predefined stop-loss level was approaching rapidly. I had a choice: stick to my plan and accept the loss, or move my stop-loss further down, hoping for a recovery. This is a critical juncture for any trader. It is where discipline is truly tested. I took a deep breath and remembered my rules. The stop-loss was there to protect my capital from catastrophic loss. Moving it would be a betrayal of my own system. With a heavy heart, but a clear mind, I let the stop-loss execute. The trade closed at a loss. It was painful, but the loss was contained within my predefined risk parameters. The lesson learned was invaluable. Flexibility is important, but not when it comes to your core risk management rules. Sticking to your stop-loss is not an admission of failure. It is an act of professional discipline. It allows you to survive to trade another day. Section 7. Lessons from the Ledger Key Takeaways for Aspiring Traders. Navigating the crypto market is a journey, not a sprint. It is a marathon run on a very volatile track. The first key takeaway is to embrace this volatility. Do not fear it, understand it. It is what provides opportunity but also demands respect. Prices will swing, sometimes wildly. Your strategy must account for this. Your mindset must be prepared for it. Expect the unexpected. This will help you remain calm when others are panicking or overly euphoric. The second crucial lesson is emotional mastery. Greed, fear, hope, FOMO, these are your enemies. They will try to derail your rational thought. Developing self-awareness is key. Recognize when emotions are influencing your decisions. Have mechanisms to counteract them. A trading plan is one such mechanism. Sticking to it, regardless of how you feel, is paramount. Trading should be boring. If it's too exciting, you are likely gambling. Third, continuous learning and adaptation are vital. The crypto space evolves at lightning speed. New technologies emerge, new narratives take hold, and market dynamics shift. You must remain a student of the market. Finally, and most importantly, risk management is your shield. Protect your capital as if your life depends on it, because your trading life certainly does. Section 8. Join the conversation. Share your crypto trading journey. My journey in the crypto markets is ongoing. It is one of constant learning, challenges, and triumphs. Each trade, each market cycle, teaches something new. I've shared some of my thoughts and experiences, but trading is a deeply personal endeavor. What works for one person may not work for another. Your risk tolerance is unique, your financial goals are your own, and your psychological makeup influences how you react to market pressures. Therefore, your path will be your own. I believe in the power of shared knowledge. The crypto community is vibrant and full of passionate individuals. We can all learn from each other. So, I invite you to join this conversation. What have your experiences been like in the crypto trading arena? Have you faced similar challenges? What strategies have you found to be effective? Share your thoughts, your questions, and your stories.